Hey guys, it's Javier Vidana. I'm here to share some data with you on the market and what I think is happening here. This is currently end of June, beginning of July, and a few things to keep in mind. I'm not just reading off an article. I'm following and tracking my own data using my own MLS. And secondly, this is based off Phoenix data. However, Phoenix has been one of the craziest markets. So if Phoenix is going like this, I can only imagine what's going on nationally. So just keep that in mind as I go on and chat about the data. So first and foremost, everybody knows this has been going on. I mean, if you've been tracking data, market, or anything along those lines, you've known that inventory has sharply risen. Here, I've been tracking basically the actives daily, and on here I have a 7-day average to make it a little more easier to see. As you can see, over the last 3 or 4 weeks, we've gone 10,000, 11,000, 12,000, 13,000. Today we were at 14,800, 13,900 active, 900 coming soon, and we're probably going to exceed 15,000 by the end of the week. Now, on this side of the equation, our pendings were remaining pretty strong, dropping very slightly. However, we can see through the pending numbers that they're starting to drop at a sharper rate than before. Using our market pulse tool here that I created, a difference of about 403 is what we're seeing right now at the moment. So we are seeing a huge difference here, and the sold numbers, of course, we're staying somewhat okay, but then we're starting to see some sharp drops, 700, 600 numbers. Here, we're starting to stay pretty stable, 8,300, 8,340, 8,182, but we're starting to see it drop more. So here's the thing that's very interesting though, and this is what leads to my opinion that I'm going to tell you in a bit. If you look at the average list and sold data, and I'm not looking at the 30-day period, I'm looking at the 7-day periods because they tend to be, a little better to track, because 30-day period is still being influenced by the last 28, 29, 30, the later half of the month. 7-day period, our sold numbers have been 574. This is market wide, by the way. 585, 590, 584, 587, 589. It's starting to hit a period where it's just kind of just stabilizing. Whereas before there was a sharp drop, now it seems to be floating around that 580, 590, and it has been daily now for a bit. Our average list price as well, once again, we were around that 600 range, and we're kind of slowly dropping. We're now ranging between that 587 to 593, just kind of staying around there. Now, once again, this is just using data I have, but I am comfortable, getting on record and sharing some of this opinion, because let's face it, people are always saying, hey, what the hell do you know? You're just some realtor. True. No one's really experienced what we're going through right now. So basically the best I can provide is what my intuition is telling me based off my experience and based off, what I've been seeing on whatnot on YouTube. As of right now, what I am predicting is not necessarily a market crash. Right now, we are experiencing our stabilization period. What does that mean? Well, basically, it's safe to say that over the past, year or two, and I just talked about this in a video if you want to go chat about it, there was just a massive increase of prices, and some might say it's artificial. I would say it's artificial, being caused by people overbidding. This huge demand of people that wanted a really low interest rate, 10,000, 11,000 people buying per month with about, 4,000 or 5,000 active listings. It was just a crazy demand situation that was insane. We saw neighborhoods go up from like 300,000 to like maybe, 450 in a 2-year period. And now all these artificial prices have gone up, and we're starting to see, okay, the dust is starting to settle. What's going to happen? So what I'm predicting right now is over the next month or two, you might see some drops in certain neighborhoods. You might see my dogs are deciding to sneeze here. You might see some drops. You might see some stabilization in some neighborhoods. You might see some areas continue to go higher. You see, people think that everyone's just starting to sell their house right now and everyone wants to get rid of the house. But a la contraire, what's going on is it's the same rate of people putting their houses for sale, but with less people buying it, it's making that inventory go up higher and higher. The folks I've spoke with over the last week or two that are looking to sell their home are not selling it for market specific reasons. Some are like, I have one that's going to go start outlanding. The other one is they're going to buy a property from their uncle here in the local area, and they're going to sell their house to get, buy it. So all kinds of reasons. So it's not necessarily an increase of an inventory of people trying to get rid of their house because their market's crashing. It's more or less the removal of demand. So this sucks, and a lot of people are going to be really struggling for the next month or two, but let's see where the price is stabilized, because if your neighborhood increased tremendously, and I'm not saying city, I'm saying neighborhood. If your neighborhood increased values at an enormous rate, and now the values don't match what people are making per month in that neighborhood, over this next few month period, we should start seeing it stabilize to where it needs to be. There's going to be one neighbor who's going to try to sell really high, and they're not going to be able to. After a month or 2, 3 months, then someone who's been looking to buy in the neighborhood will give them a solid offer. It might not be the offer they want. The price went down. Then another neighbor is going to try it. Price went down. And what I'm hoping is those values start stabilizing. Now, here's the thing. The biggest thing that's making me say it's not a market crash is the enormous amount of people that are just on the sidelines still right now. I've had more conversations that I'm comfortable with over the last 2 months, just telling people it's not going to work. You cannot afford a house anymore. And I'm so sorry. Phoenix sucks, and whatever city they're looking in sucks. But it's just too expensive. Like, the houses just raised too high, and I recommend them to look at outskirts cities or continue to save or whatever the situation it is. And it's unfortunate, but all those people are going to have to go rent, or they're going to continue living in their current situation. But there's a lot of people on the sidelines. So I predict in the next 3 to 6 months, banks are going to start getting more creative with their lending. I think down payment assistance programs are going to start making a huge comeback now that actually inventory has started to go up and buyer demand is decreasing. There's actually more FHA homes being accepted. So let me share with you some data. I'm also tracking the amount of FHA sales happening per month, and I can see here FHA it's starting to go up. 6.5, 6.6, 6.7, 6.7 of all sales in the last, basically. So that is going up very, very slightly, and that might not seem like a lot. I am seeing something, right? Conventionals were solid 52, 53. Now they're 50.3, 30 point. Cash sales are unfortunately still going up, but I can start seeing FHA slowly getting up there. And I believe home sellers are going to be more accepting of FHA offers. And with FHA offers being more acceptable, I think down payment assistance is going to start being more in place. So that's what I'm currently thinking is happening. I just want to kind of provide an alternative view instead of all of the people that are covering articles or saying the market's going to crash. I think right now we're at just a kind of balancing out period. When you're boiling, I said in my last video too, you're boiling milk and just kind of seeing it go up, and then you take it off the heat and you just kind of just drop and see where the levels are. I think that's where we are right now. So right now I'm going to put my should you buy radar, if I had a radar, to probably right now, unless you have an super immediate need and you're like, dude, my lease is up today or this next month, I gotta move out. Everyone else, if there's no immediate need, probably don't buy for the next 3 months, just to see what happens with the values, just to see where your neighborhood start kind of balancing out. Once again, only do it if you are in immediate urgent need and your plans were going to be done regardless of what I say. Everybody else, probably just take the next 3 to 4 months to kind of see what happens specifically with your neighborhoods. Call a realtor, let them set up an MLS search of not only actives in that neighborhoods you're interested in, but sold as well. So you can start seeing what changes, what's adjusting, and just really start tracking the data. Thank you guys. If you guys looking for any home buying resources, go to javiervidana.com/resources. And of course, if you're looking for an agent as well, go to homeandmind.com/Javier. Links in the description. What do you guys think? Curious to see what you guys' opinions are. We got some smarties in the comment section, so looking forward to reading what you guys have to say and potentially making more videos about it. Thank you.